In 1997, back when Netscape ruled the web and Seinfeld was the most popular show on television, yes, I still love Seinfeld reruns, the average American home sold for $172,200. Today, the typical American home goes for $456,800 according to HUD. Of course, this is not true here in Santa Cruz County, where our current median home sales price is $1.3 million for a single family home. Hi, I'm Shamika Fox, your Santa Cruz real estate expert. Despite nearly a threefold increase in prices, when a home is sold today, the amount of profit exempt from taxation remains pegged at a level established in 1997 when the Taxpayer Relief Act was passed. The bill passed with bipartisan support and signed into law by President Clinton allowed homeowners to exclude capital gains of $250,000 for single people or $500,000 for married filing jointly from taxation when they sell their primary residence, defined as being lived in for at least 2 of the last 5 years. A number of economists and tax policy experts have perennially suggested raising the threshold or indexing the rate for inflation, but their efforts have been without success. However, given the dramatic surge in home prices in recent years and the apparent intractability of inflation, their recommendations might soon become more salient. In 1997, when the exclusion levels came out, they covered virtually all, say 95% or more of home sales, says Evan Lydiard, the Director of Federal Tax Policy at the National Association of Realtors. That level has been degrading every day since then because they didn't index it for inflation. What? So now the exclusion is the shadow of what it was before. Every day more and more home sales surpass the threshold for capital gains exemptions established a decade ago. According to a congressional research report, 43% of taxpayers in 2022 had sales prices that could potentially expose them to capital gains taxes compared to just 3% when the provision was enacted. Importantly, the tax does not affect everyone equally. High-income earners are most likely to surpass the capital gains exemption threshold when selling their homes. In addition, individuals who have owned their homes for long periods of time, allowing large gains to accrue, and individuals living in markets that experience high levels of price appreciation are also affected. It's certainly the case that a lot of people are holding on to their homes for 20 years or more, and the inflation component of these capital gains can be very large, says Will McBride, Vice President of Tax and Economic Policy at the Tax Foundation, a think tank in Washington. And we are back to 40-year high inflation, so it's a suddenly more pressing issue. Nearly 1 in every 3 homeowners have owned their home for at least 20 years, according to the U.S. Census Bureau's American Housing Survey. In addition, coastal states tend to see a much higher level of price appreciation than inland states, with some exceptions like Idaho. In California, nearly every home owned since before 2000 has more than $250,000 in gains, according to Lydiard, and 2/3 have at least $500,000 in gains. It's been a big problem out there for a long time, he adds. One of the primary effects of the creeping capital gains tax burden is an increased barrier to labor mobility. Significant distortions are created by the tax liability of gains when an individual or couple owns a home and wants to move. Many homeowners end up putting off selling because they don't want to or can't afford to pay the tax. We're talking about seniors who maybe want to downsize because they need to go to a retirement facility or move to a house that's all on one floor, says Lydiard. Those are the ones who are particularly vulnerable. Elderly taxpayers who have lost a spouse are also vulnerable since their capital gains exclusion are limited to $250,000, the lower ceiling that applies to singles unless they sell within 2 years of their spouse's death. Lydiard also points out that a secondary effect of increasing the exemption threshold could be greater housing supply. When individuals choose to hold onto their property and account of the tax burden, that's one less home that's available for somebody else to buy, he adds. However, the prospect of a higher gains exemption threshold is not without detractors. Leonard Berman, a fellow at the Urban Institute and author of The Labyrinth of Capital Gains Tax Policy, a guide for the perplexed, has mixed feelings about it. For one, he is concerned that increasing the threshold would only be a boon to the rich. Somebody making $75,000 a year will be fine with the $250,000 or $500,000 exclusion for the foreseeable future, says Berman. He also believes a raised threshold could push up home prices. If you think about what you're willing to pay for a home Berman says, and you realize all your capital gains are going to be free from tax as long as you hold it for at least 2 years, it makes you willing to pay more for the home because you're going to get that back in tax savings. Considering many people cannot afford to buy in the current housing market, exempting more gains primarily for wealthy individuals would harm people with relatively modest incomes, Berman adds. It's not clear how much a higher exemption threshold would push up demand for homes amongst high income earners and investors. Housing is already treated relatively well in terms of tax implications compared to other forms of investment. Currently, no legislation has been proposed to make any changes to the capital gains on home sales provisions. But Democrats would be the most likely candidates to put forward a bill either to index the exemption for inflation or to increase the threshold, since blue states tend to experience higher levels of price appreciation. I wouldn't be surprised if there was more attention paid to the provision now that we have so much inflation and that it's not transitory, says McBride. It appears we'll be dealing with relatively high inflation for a long time. In the meantime, there's still one tried and true way to circumvent paying a capital gains tax on a primary residence. A rich person who owns a home with millions of dollars of capital gains can avoid paying the tax by the somewhat drastic expedient of dying, quips Berman. If an individual holds onto their home until death, it passes to their heirs tax-free. Now, of course, I am not a tax expert, so do please be sure to run any and all tax questions and scenarios through your CPA. This information is provided to give you a general overview of capital gains thanks to Riz Media, which I use as a research resource. If you'd like additional information or to discuss how capital gains may affect you and your Santa Cruz real estate goals, please feel free to reach out for a complimentary, confidential consultation. I'm Shamika Fox, your Santa Cruz real estate expert, and as always, I'm here to help.